There are so many ETFs out there, which one should you be investing in? In this video, I will outline 3 key things that you should be considering before you invest in an ETF, so make sure you watch till the very end. Hey guys, it's Dan here and welcome back to my perspective. If you're new to the channel and you want to learn more about investing in the stock market, becoming more financially literate, consider subscribing to my channel and remember to hit that bell so you'll get notified when a new video comes out. If you enjoy this video, please give a thumbs up so that more people on this platform will be able to see this video. So, before we dive in how to pick an ETF, I want to make sure that you understand exactly what an ETF is. The full non-abbreviated name is Exchange Traded Funds, and it is exactly what the name says. These are funds that are traded on an exchange, just like how you would trade shares of a company on the New York Stock Exchange, for example. Traditionally, if we wanted to invest in funds, we would directly approach our brokers or the fund providers, and this would normally be in the form of mutual funds, where we can buy or sell units of the fund. And typically, you're only able to trade once per day after the market has closed. But thanks to the concept of ETFs, investors are now able to invest in these funds via the stock exchange and trade them during the normal hours of the market as you would with any other company stock. Alright, so usually you'd start off with asset classes and composition. Ask yourself what kind of assets are you interested in. For most of us, it'll probably be equities, but some may want to invest in bonds, commodities like precious metals, or even real estate investment trusts. And that's really the first level of diversification. Then you would think about diversification at the country level, whether you're investing in foreign government bonds or in well-known foreign companies like Alibaba or Samsung. The next step is to think about the weightings of each component in the portfolio. For example, you may choose to have even allocations between bonds and equities or even commodities. And if that's the case, there are ETFs that have different weightings of those asset classes depending on how much risk you're willing to take. Obviously, you won't be able to find an ETF that fits exactly what you want, but there should be plenty that you can choose from. Take a few of the iShares core ETFs for example. They offer a conservative allocation, moderate allocation, growth allocation, and even an aggressive allocation. So the more aggressive the ETF, the more weighting is placed on equities, and that usually means more US equities. For pure equities, you have a lot more choice. You can invest in ETFs that track an index like the S&P 500, Dow Jones, Nasdaq, Russell 1000, etc. You can also invest based on a sector like ETFs that track the healthcare sector, the semiconductor industry, etc. or invest based on a specialization like 5G, robotics and AI, and even electric vehicles. The key thing here is that if you're planning to trade ETFs fairly often, make sure that the trading volume of the actual ETF and of its underlying securities are high, so that there are lots of buyers and sellers, and this usually means that the bid-ask spread is low or tight. For example, an ETF that invests in the Nasdaq will probably be more liquid than an ETF that invests in an overseas index. And the stock-like attribute that ETFs have is a clear advantage compared to mutual funds. Now, the second one is probably the most obvious one, and that is the costs of the ETF. This is usually disclosed in the form of net expense ratios. This fee essentially includes management fees, which is the cost paid to the managers of the fund. It also includes operating or administrative costs for setting up, promoting and maintaining that fund, etc. So the amount of fees will change according to the nature and type of the fund. And funds are largely characterized into 2 different groups. You've got the active funds, you've got passive funds. And very simply, the difference is that for active funds, you've got a fund manager that selects and trades stocks periodically with the aim of trying to achieve the best returns for its investors. With passive funds, they're built to track an index, industry sector or segment. They're basically a mirror of the benchmark, so there is no individual selection of stocks. But if you want to know more about active versus passive investing, just click on the link above here, and that should take you to one of my previous videos on this topic. And that is why active funds have a higher net expense ratio. Best examples are Cathie Wood's active ETFs. She's known to be a proponent of disruptive technology. So if we take ARK Invest's Innovation ETF, you'll see that her holdings are all in disruptive, innovative companies, selected by her essentially. The expense ratio currently stands at 0.75%. On the other hand, index funds usually charge the lowest fees, as you'd only need to rebalance the portfolio periodically to reflect a specific index. You don't need to do much research at all. Most index funds now charge less than 0.1% for management fees. For example, the Vanguard S&P 500 ETF charges only 0.03% in fees. Though the thing with these index ETFs is that there are many of them that track the same popular index. Just for S&P 500 alone, you've got Vanguard, Spider, and iShares, so you need to make sure you know the difference in fees. There's also one other thing you need to know, and that is the tracking differences. The truth about index funds is that it's not a definite one-to-one match, because when the index rebalances, the fund is required to rebalance as well, and there will be some timing differences and additional costs, etc. So when you're choosing an index fund, make sure you compare the fees and also their tracking differences. And one way you can do that is using ETF screeners like ETF.com. It will show you the tracking differences and some attributes of the fund. Usually tracking differences are pretty tiny, but when you stretch it over a long time period, it could become quite substantial. The third one is the reputation and performance of the fund. As you would with a company stock, you look into the company's management, the board of directors, to basically see who's at the helm and whether the team is competent enough to run the company. Likewise, with an active ETF, you should find out the manager behind that fund and do a little bit of digging into the manager's background. What funds have they managed before? How successful were they at managing those funds? And if they are well known like Kathy Wood, you could watch her interviews, get to know what kind of investor she is and whether you believe in her strategies. Obviously, past performances don't necessarily equate to future performances, but its past performances should give you some indication of how it moves with the general market, such as the S&P 500. If an active ETF is obviously trailing the market, you may want to reconsider investing in that ETF, and you'll find that most of the active funds underperform the market. So most times, you're probably better off just investing in index funds. That is what Warren Buffett also recommends, investing in low-cost index funds, because if you had invested $10,000 in the S&P 500 back in 1942, it would be worth around $51 million in 2019. Of course, these three factors aren't the only ones you should consider, but they should form an integral part of your decision-making process when you buy ETFs. Other factors you should also consider are the domicile of the ETF, as this will give rise to the tax implications, and also other fund characteristics, such as the total amount of assets under management, and so on. And a good place to start would be ETF.com screener. You can go through the different filters, apply the selections you want, and choose an ETF that best fits your needs. I hope now you have a better understanding of how to go about choosing an ETF. There are so many of them out there, but not all are worth investing, and sometimes we just need to spend a bit more time and effort understanding some of those details of those ETFs so that we can make the best investment decisions. Thanks for watching, and make sure you subscribe to the channel if you want to see more of these videos. Have an awesome day, and I'll see you next time.